Okay, we're going to talk about one of our most proprietary tools. It's called the DZONE. It's a script, and what it does, its purpose is to tell you how far it will move, how long it will take, which way first. To understand this, we're going to cover some vocabulary that really talks about a dispersion zone. And a dispersion zone really is, let's erase some of this. We'll come back to it right here. We can always put it back in. This is a really simple pattern. It's how far we've retraced, and there's 2 or 3 bars. Maybe we retraced 50%, and there's 2 or 3 bars there. 1, 2, 3. Well, a dispersion zone is, there's 2 of them. And I like to think of them as a football field. This one is where resistance forms, and this one is where support forms. So what if, hypothetically, I just went back in time and I said, computer, and computers can do this. This is where augmented intelligence accelerates. There is no way that a human could suck through this much data. That you can't get through this much data, so you have to have a computer help you. It'll go back in time. It'll find this really simple pattern. Okay, I'll make this a solid line color instead of a dashed line. And then we're going to go forward in time after we find this pattern, and we're going to see what happens next. Now, after we do that, we're just going back in time and then forward in time, and we're going to see what happens next. Well, there's a resistance point that'll form and a support point. Well, one of these will happen first, and then one of them will happen second. Okay? So we're going to go back in time and find out which one of these happens first or second. Now, the best way to do it is just to show you. Let's bring this up. This has to have lots and lots of data. There are 26,000 data points in here, giving you an 82% probability of a rise. And this is a standard deviation box. Okay, 1.5 standard deviations will appear in this box, and 1.5 standard deviations will appear in this box. And this is where support or resistance will form based on time of day and pattern. Okay, based on time of day and pattern. Okay, so if I bring this on, there's some inputs in here we can bring in. The colors, we'll go through those in a second. Show the information in the top right, and these dots. Okay, now if I bring these dots on, what they do is it colors the screen up big time. What it will do is it will show you where support and resistance formed in the past. So if you want to see it's running, you right click and you can see remove script. It's running. This takes a little bit. Now, this is where support or resistance formed. All right. This is where it formed. Now, that whole big box in there, blue, I believe, is resistance, and red is where support formed. Okay. And it formed all through there. I can't remember which one's which. Maybe I've got them both red colors. You can set them both ways. We're just looking for where support formed, and I might have had it just draw resistance. There's so many data points that the predominant color will override it, whichever one it went through in the loop. So the blue ones are getting overwritten because they come in. There's so many data points on there. It's coming in at the same time. And you can't really see it. Just this is where support and resistance formed. All right, that's what one side of it looks like. Well, if you look at both sides, it's a bell curve. Well, this actually has both sides. It's just been overwritten. It kind of looks like a bell curve right back here, with the bulk of the data points appearing in this box. Okay, because we're almost to where resistance should form. Now, I don't usually display those because I don't like them on the screen. So it's where it show dots. I turn it off. We make the dots smaller too. That's the size of the dots, in case you're blind. This shows you based on just time of day, just this time of day, what's happening. Okay, just on this time of day, look for this basic pattern. How far are we up off support or resistance, and what's happened at this time of day? Well, the best thing to do is take a basic pattern and this time of day. It'll give you probability of movement. Okay. Now, what you have to factor in is your cost. Your cost, this is only going to go 14 ticks on average, so it's going to be pretty tough for you right there. 14 ticks isn't very big. The drop, though, is 27 ticks. That's awesome. What I would do is I would look for a reversal. Even though there's an 80% probability of going your way, it's only 14 ticks. And it's already started to reverse. You can see this. All it is predicting the next support or resistance point. It doesn't mean that it's going to rise right there. It says out of this, how many times did resistance form? Well, what is resistance forming? I'm going to go in and change this object at the very bottom, this trend line. I'm going to go to edit, and I'm going to change this to black. Okay, now look. If you look at this and it starts to reverse, it's already reversing. Okay, what that means is since it's going down, if you take this line right here and we just move it, this is the line you want to focus on. That's how far it should drop. Okay, it should actually drop from the peak where resistance forms. So technically right there, we should drop into this area. Now, does that mean that support can't form and just hook up there? No. This is only designed to give you probability of direction and the amount of volatility associated with this time of day. Okay, this is out of 26,000 data points. This is the volatility associated with this time of day. Now, the best one to look at is you take this in and you come down here and you say, well, this is the biggest filter, was the time of the day. And I say, well, look, I'm going to say sample both time of day and a pattern, like how far back it is. Before we do that, let's sample just this pattern. Okay, how many data points do we get? The pattern is how many bars past support or resistance are we? Now, that box only tells you which way it thinks it's going to go. Okay, so it's saying that, hey, right in here is the expected move that it should go. Now, if we come down in here and we say, all right, that's the pattern we're going to look for. This is for both. So by time of day and pattern, how many data points are we going to get? Now, the one that gives us the very most data points is sample it by, don't even worry about time of day, don't worry about pattern, sample as many data points as you can get. And it'll go through and look for this. And it takes it a little bit to run. Now it'll go through there and check it out. 44,000 data points. It doubled the amount of data points. But the probability went to 52%, not based on time of day. Now notice the probability changed. It changed because of time of day. Now it said the average rise is only going to be 10 ticks, and then the drop off that average was going to be this. This is the drop that it goes. It goes 22 pips, which is about the same. So we should expect a 22 pip drop on this Australian one. All right. So you have to factor in the spread when you're figuring that out. That's why sometimes it's better to trade higher time frames. It's easier. It's a little more stressful because things go against you sometimes. But you can bring this on and draw it on and say, all right, I want to look at this. This is by this time of day on a 15-minute chart with the exact number of bars between support and resistance. Okay. So there's 1,000 data points it found. There's 77% probability of resistance forming next. Well, it's already starting to go down. If it does drop, though, how far is it going to drop? On this one, it says 22 pips. Well, they're both going to come in about the same time. I'd say there's a pretty good probability that we're heading down to that. That's at least 16 pips. And that's how you look at it. Okay, now let's go back into the PowerPoint. What this is doing in the PowerPoint, it's saying, well, that's what a dispersion zone is. This is the resistance zone where it'll form. This is the support zone. That's where that'll form. The green line there is what happens next. The length of it is how long it takes and how far will it move. So the green line's how long, which way it'll go first, how long it'll take, and how far it'll move, and it'll form resistance or support in that area. So this defines them. The colors, R zone, colors this. S zone colors this. Slope 1, which happens first, colors this, and slope 2 colors this. Okay. What happens next? Well, there's an 82% probability next based on 25,000 data points. So this is the number of events it's based on. Okay, so this goes back in time and looks at rudimentary patterns. So it says, look, what's a basic pattern? How far is it pulled back and retraced? Find that pattern and give me the probabilities. Next, we have a simple pattern. It's that rudimentary pattern puts 2 or 3 bars. Whatever bars are past support or resistance, give me the probability of that pattern. Okay, so a rudimentary pattern became a simple pattern. Now, sample both. That means that you're going to look at time of day and a very rudimentary pattern. Sample none means you're going to just look for the most basic pattern you can find and get as many data points you can. Sample by pattern, it looks for really complex patterns. So sampling by pattern, it can cause us to go a little bit slower, but you can do this. We're going to bring this up, and we're going to put this on here, and we're going to go to pattern to hunt for. Let's go pattern 103. This pattern is a bull pullback, and it will take a minute, and it has to be perfect before it finds it. It only found 719 bull pullbacks in 12 years on a 15-minute chart. But it's saying on a bull pullback, with that, it'll drop first, which it is. It's dropping. That's why you need a good trigger. It's going to drop on average 7 more pips if you find it, and then take off. Okay, so that's showing you a bull pullback. And right here, the red is the pullback. The blue is the rise that it'll get. And you like to look at the size of the boxes. I like to look at the size of the box. This box's size is 52 pips. This gives you risk reward. This is 40 pips. It won't rise quite as much because it'll come up to resistance. Now, that's not sampled by time of day or anything like that, so we have to factor that in later. Now, this where it says old range, your previous range between support and resistance is this many pips. And your expected range is this many pips. It's expecting it to go sideways. Okay, that's what it's stating. So it's a pretty interesting indicator to use. Let's hit stop. Well, let's go to the next one. I think we have one more slide. This indicator is used to tell you how far it'll move, what happens next, how long it takes. It needs lots of data to run, and it only predicts the next pivot, and then you can redraw it. Thanks.